Welcome back. Today we're running through this week's IPOs, 3 that just hit the market and 1 coming up next week, so you know exactly which new listings are worth watching. For each one, we'll hit the business, the IPO itself, the outlook, and an educational trade plan, so stick around to the end. Today, let's talk about Bending Spoons SPA, a dynamic player in the tech industry known for its cutting-edge mobile applications. Founded with a vision to reshape the way we interact with technology, Bending Spoons has quickly established itself as a leader in the app development space. With a portfolio of diverse applications, they cater to various needs from productivity tools to entertainment. This company is navigating the competitive landscape of the tech sector, where innovation and user engagement are key. As mobile technology continues to evolve, Bending Spoons SPA is at the forefront, consistently pushing boundaries to create engaging user experiences. It's an exciting time for them, and as they continue to grow, they may capture even more market share in this bustling industry. On July 1, 2026, Bending Spoons SPA officially made its debut on the XNAS exchange. The company set an initial price band between $26 and $28, which created a buzz among investors eager to get in on the action. Ultimately, the final offering price was pegged at $29. Fast forward to today, and the stock is currently trading at an impressive $35.93, indicating strong demand and positive market sentiment around the company. The successful listing and subsequent price action reflect investor confidence in Bending Spoons' business model and growth potential. As the stock stabilizes in the market, it will be interesting to observe how the trading dynamics unfold in the days and weeks ahead. Looking ahead, the short-term outlook for Bending Spoons SPA seems quite bullish, especially with its current upward price momentum. For those considering an entry point, a potential strategy could be to watch for any dips towards the $30 mark, which might offer a favorable buying opportunity. Long-term, the growth trajectory appears promising, driven by the company's commitment to innovation and maintaining user engagement through its app offerings. However, it's crucial to be mindful of the risks involved. Market volatility and increasing competition in the tech sector could impact stock performance. An educational exit strategy might involve setting a target price based on your risk tolerance and investment goals. Remember, it's always important to do thorough research and understand your own financial situation before making any investment decisions. Hey everyone, let's dive into ITG Inc., a company that's making waves in the tech sector. ITG specializes in innovative software solutions, particularly in data analytics and cloud computing services. Their goal is simple yet powerful. They aim to empower businesses by providing actionable insights through advanced technology. In today's data-driven world, companies need to harness their data effectively, and that's where ITG steps in. They leverage cutting-edge tech to help organizations make informed decisions, streamline operations, and ultimately drive growth. With the tech sector continually evolving, ITG is positioning itself as a key player in delivering essential tools and services to businesses looking to thrive in the digital landscape. It's an exciting space to watch, and ITG's innovative approach could set the stage for significant opportunities ahead. Now, let's talk about the IPO details for ITG Inc. This company officially went public on July 1, 2026, and it chose to list on the NASDAQ, a popular exchange for tech stocks. The initial price band was set between $19 and $22, but interestingly, it ended up pricing lower at $16. Fast forward to today, and ITG is trading around $15.46, which is just a bit below its offering price. This could indicate some initial market hesitation, or perhaps a broader trend affecting tech stocks at the moment. It's crucial to keep an eye on how the stock performs in the coming days and weeks, as that will provide insights into investor sentiment and market conditions. So if you're considering watching this stock, now is the time to gather more information and monitor its trading patterns closely. Looking ahead, the outlook for ITG Inc. is quite intriguing. In the short term, we might see some volatility as the market stabilizes following their IPO. This is pretty common for newly listed companies, especially in the tech sector. However, the long-term outlook appears promising as more businesses recognize the need for advanced tech solutions like those offered by ITG. For those considering a trade plan, an educational entry point could be around $15.50, especially if the stock shows signs of stability and buyer interest. From there, a target exit could be set near $20.50, as ITG continues to gain traction in the market. It's important to remember, though, that key risks include broader market fluctuations and competition within the tech sector. As always, stay informed and do thorough research before making any investment decisions. Hey everyone! Today we're diving into Neutron Holdings Inc., better known by their ticker, LIME. This innovative company operates in the mobility sector, providing electric scooter and bike-sharing services that aim to transform how we navigate urban environments. With a growing emphasis on sustainability, LIME is not just about getting from point A to point B, they're also about reducing carbon footprints and offering eco-friendly transport options. As cities around the world grapple with congestion and pollution, LIME's services are becoming increasingly relevant. This is a company that's not only addressing current transportation needs, but is also poised to play a significant role in the future of urban mobility. So let's see how they've fared with their recent IPO. Now, let's talk about the IPO details. Neutron Holdings Inc. officially hit the market on July 1, 2026. They set their IPO price band between $24 and $26 and ultimately priced their shares at $25. This pricing allowed them to raise a substantial $173.9 million, providing them with the capital to expand their operations and enhance their services. LIME is now trading on the NASDAQ under the ticker LIME, and as of now, their last traded price is also $25. This indicates that the market has responded positively to their debut, maintaining the IPO price, which is a good sign for investor confidence. It will be interesting to see how they progress in the coming weeks. Looking ahead, the outlook for LIME looks intriguing. In the short term, it will be essential to keep an eye on how the market reacts to their plans for service expansion and potential partnerships. If they manage to scale effectively, it could lead to increased user adoption and revenue growth. Long-term, LIME is well-positioned within the sustainable transport sector, which is expected to grow as more cities prioritize eco-friendly initiatives. If you're considering an entry point, you might look for opportunities around their performance announcements or any major developments in the urban mobility landscape. However, it's crucial to keep in mind that the key risk here involves regulatory challenges that could arise as cities implement new rules for electric scooters and bike-sharing services. Always do your research and stay informed. Today, let's dive into Tarsier Pharma Limited, an upcoming player in the biotech sector. Tarsier Pharma is dedicated to developing innovative therapeutics, with a special focus on treatments for rare diseases. This niche is crucial, often lacks sufficient attention and investment compared to more common ailments. The company's commitment to cutting-edge research positions it well in a competitive landscape where breakthroughs can lead to significant advancements in patient care. With a growing demand for specialized treatments, Tarsier's innovative approach could resonate strongly with healthcare providers and patients alike. As we look forward to their IPO, it's essential to consider how their mission aligns with industry trends and the potential impact they could have on the market. Now, let's get into the details of Tarsier Pharma's upcoming IPO. Scheduled to list on July 9, 2026, this IPO is generating buzz in the market. The company plans to offer shares in a price band ranging from $8 to $10 each, aiming to raise a substantial $50 million. This capital infusion is crucial for Tarsier, as it will support their ongoing research and development efforts. The shares will be traded on the XNYS exchange, which is known for hosting a variety of biotech companies. While we await precise trading performance, the interest in biotech IPOs has been robust, suggesting that investors may be keen to explore Tarsier's potential as they look for innovative solutions in healthcare. Looking ahead, Tarsier Pharma presents an intriguing case with a generally positive long-term outlook. The increasing demand for treatments targeting rare diseases could play to their advantage, especially if they can demonstrate efficacy in their drug candidates. For investors watching this IPO, an educational entry point could be to consider buying shares near the lower end of the price band at $8, while keeping an eye on market sentiment as the listing date approaches. On the flip side, it's crucial to acknowledge the key risk here. Regulatory hurdles in drug development can pose significant challenges. navigating